Imagine if we could stop talking about the Magnificent Seven and start talking about the Gap. It feels like it's been years since Wall Street's focused on iconic household names beyond Apple or Amazon or Alphabet. For a long time now, we've been plagued by the so-called narrowness of the stock market, and that makes for a rather forbidding atmosphere for most home gamers. Nobody wants to stick their neck out on something that falls outside that small pool of consistent winners. But last night, Gap, one of the most recognizable brands in the nation, reported a startling quarter with a colossal turn in both Gap and Old Navy. The numbers were terrific, something that almost nobody expected. The new CEO, Richard Dixon, has orchestrated the kind of turnaround that reminds us we need to keep our eyes and our minds open, because that's how you catch the stunning 31% gain you got in the stock of Gap today. This kind of thing hits very close to home for me. This past weekend, my wife Lisa and I decided to take a trip to the mall to see what's going on in the retail trenches. We saw nothing to write home about in the very dreary Nordstrom. We didn't see the uptick I'd hoped for in RH, the old Restoration Hardware. But Williams-Sonoma packed. Ralph Lauren had a ton of good stuff, a lot of people. That purple label seemed pretty good to me. And Gap. Not only did the Gap look real good, but Banana Republic seems like it's becoming a much better looking store. Sure enough, Williams-Sonoma reported a terrific quarter, with CEO Laura Albert talking about how she's aiming for profitability rather than just shooting for higher sales. If you own the stock, which is now up more than 55% for the year, you certainly agree with that strategy. Ralph Lauren had the misfortune of reporting back when long-term interest rates were still soaring. If it reported on Monday, I think the stock would roar in response. I like that. That's opportunity. But nothing comes close to this miraculous 31% gain in the Gap today, because the change in the chain's fortune are just so dramatic. I like accessible names. Sure, the gains from enterprise software companies are fun to harvest. Think ServiceNow, MongoDB, Datadog. However, those companies are hard to get your head around, because unless you interact with their technology at work, people are clueless about what they really do. I prefer betting on stocks that are easy to understand. Then it seems more like investing than betting, and that's why I want to see an Under Armour come back, or maybe a turnaround in VF Corp. It can happen. I think North Face, Timberlands, Vans, or maybe an uptick in, say, Restaurant Brands, the parent of Burger King. I wish Bed Bath & Beyond had been able to stay afloat. I got my fingers crossed for Nordstrom or Kohl's to enter a big turn. They report next week. So far, no dice. It's just the same old, same old. At least until Gap stock exploded higher today. Oh, and Ross Stores jumped 7% on virtually any other day. That would have been best performer retail. Now, I have no illusions about how difficult it could be to buy these retail stocks when we're hearing constantly that the consumer's strapped for cash, higher interest rates hurting everyone, credit card problems, people have less disposable income, now that they need to pay back those student loans. Until this week's numbers, I regarded those problems as a genuine impediment to everyone in the industry, except for Amazon, Costco, Walmart, and TJX. Now, though, many companies are triumphing over these obstacles. A couple of days ago, it was Target. Now it's the Gap. I mention this because for most of my career, there was money to be made away from the most abstruse companies in tech. This year, it's been very hard to do, but that may be changing after these terrific retail quarters. If Target and the Gap are truly leading the way, then we'll have a legitimate bull market on our hands, not just a tech bull market, with a couple of the usual suspects thrown in. I like to say there's always a bull market somewhere, and I promise to try to find it just for you, right here on Mad Money. I'm Jim Cramer. See you Monday. Last call starts now.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.